They had waited 7 years, but oil bulls may now need to wait not even 7 days to return to $100 pricing. As the Ukraine crisis remained on the boil at the start of another week, crude prices were about $5 a barrel or less from reaching triple-digit pricing, the first time they would see such a milestone since July 2014. Gold was also exhibiting signs of a breakout, with the Russia-Ukraine conflict providing the geopolitical tailwind for the yellow metal to progress from mid-$1,800 levels to the long-awaited $1,900 berth. Last week, crude oil's global benchmark Brent rose for the 8th week in a row while bullion clinched a third weekly win. This week, bulls in both commodities will likely be victorious again on U.S. warnings that Russia could invade Ukraine at any time and even create a surprise pretext for the attack. If troop movement happens, Brent crude won't have any trouble rallying above the $100 level. Oil prices will remain extremely volatile and sensitive to incremental updates regarding the Ukraine situation. Oil overbought, but that won't stop its rally. After roughly 2 straight months of gains, both Brent and U.S. crude's West Texas Intermediate benchmarks were overbought. In WTI's case, this week's rise from the lows of $88.40 to the highs of $94.65 has left it with a weekly stochastic reading of 94/94 and weekly RSI reading of 71. These are the prime overbought conditions that shout out aloud for an imminent correction to at least $88.77 over short to mid-term. But will we get that? Probably not, as long as the Ukraine crisis keeps bubbling. Consolidation above $90 and $92 could strengthen WTI to position for $98 and eventually cross the much-anticipated $100 mark, with $101 and $107 targets. Gold could scale $1,916 if breakout continues. In gold's case, he said, with its rise from $1,808 support and breakthrough of $1,865, it had broken multiple resistance levels. Prices may witness a continued charge to $1,900 to $1,916, if gold can sustain above the $1,843 to $1,825 support zone in the event of any correction. Markets remained on the edge over Ukraine, after a phone call between U.S. President Joseph Biden and Russian leader Vladimir Putin failed to douse the potential flames of war, with Washington reaffirming its pledge to defend every inch of NATO territory if fighting indeed broke out. But there's also potential for any risk rally to be capped by tough talk likely to come from a host of Federal Reserve bankers who'll be speaking this week about impending action by the central bank in fighting inflation. St. Louis Fed's Bullard and Loretta Mester will speak on Thursday before Friday's full-day spread of Fed Governor Lael Brainerd, New York Fed President John Williams, Fed Governor Christopher Waller and Chicago Fed President Charles Evans. Last Thursday, Bullard said in the light of the latest CPI reading he now wants a full percentage point of interest rate hikes over the next 3 Fed meetings. That's the kind of super hawkish Fed talk that even the most bullish investors in oil fear. After Bullard's comments last week about the potential need for a 100 basis point rate hike by July, crude prices fell 2% on the day. And there's more from the Fed this week, other than its speakers. The central bank's minutes from its January meeting will be released on Wednesday. Powerful Fed week of speakers and meeting minutes. With markets already pricing in a strong chance that the Fed will hike rates by 0.5 percentage point at its upcoming March meeting, Wednesday's minutes from the Fed's January meeting will be scrutinized for any indications on how big a move officials are contemplating. Last month, Fed Chair Jerome Powell flagged a March lift-off and said there was quite a bit of room to raise interest rates without threatening the recovery in the labor market. On Friday, Goldman Sachs said it now expects 7/4 percentage point rate hikes this year, up from its previous forecast of 5, as it updated its forecast following Thursday's US CPI data. Markets will get an additional update on the inflation picture with Tuesday's release of producer price inflation figures, which are expected to remain elevated. Soaring inflation has seen consumer sentiment deteriorate, so Wednesday's data on retail sales will also be in focus this week. Retail sales are expected to have risen 1.8% last month, boosted by higher auto sales. The economic calendar also features reports on industrial production, initial jobless claims, existing home sales, building permits, and housing starts.